Good morning. We have a very good Monday morning, 5:53 a.m. Pacific Standard Time. What's good about this Monday morning is learning low volume pre-market gap sequences. As far as the price action will work in the actual buy side, sell side tape on 12/5 of 2011. The pre-market volume is very important so that you can gauge exactly how the option price will open up for you and how can you make a market. And they're very wide markets, as we all know. And we're going to go to the 12/9 contract today, and we're going to take that gap. So that's a 625. So what are we going to do? We're going to go over here to the 625, and we're going to put that right here. Here it is, 12/9, 625 call. They were plus 255, and there was your volume. Now, pre-market pricing with gaps on how these are going to gap up in value and what the kinds of premium that they're going to give you on that opening bell on the first pass. Rather, what we're looking for in this case, do they inflate the opening weekly call? It's a weekly contract, let us not forget. And it starts on the opening bell as day 1 today and ends in day 5. Now, how do I apply a low volume? I got 7,200 shares in pre-market volume. This is not the opening bell. This is pre-market, how to use pre-market, how to short gap ratios, how to apply check and balances using the net weight between the buyer and the seller, and either in every single day you will understand that the gap, it's a second Monday since the 1075 rally that we had. So we went from 1075 in the indexes, because we did, and once we went up to those highs, then Europe, and let us not forget what the S&P actually did. Here's a daily chart real quick. I'll just go back and show it to you in pre-market, and clearly this was where your original breakout was, right here. Let us not forget that. And so here we are up here at this daily simple moving average, okay, and you have to close above that. And I said that this top over here has to become a new consolidation to run up and get to that 1325 handle area that we've always talked about within the upside volatility of a market. You watch them mark the market down. This was a mark down, and now this is a mark up. And futures do the same thing. They get marked up. And you like to see from any rally, calendar yearly low. This was a 2011 low. This was where it started down here at our 1075 handle. And we went up. And then we had a markdown globally. A global markdown right here. Now, that very same global markdown that occurred here is now marking the asset back up in value. And that's why you see on the pre-market gap up open list, these are the values that are created within the futures market as well. That's a different topic and a different component. However, it would behoove you to learn that, in my humble opinion. Apple, at some point, has to start acting better. The leader, Google, we had it. That weekly buy signal, unfortunately, is going to get to the high side, and we're going to be looking at, I'm going to put in that 630 put that I talked about. Okay? I'm going to go in. Remember that this 630 put on a weekly 12.9 on a 630 put. Look at here. Last print 1380 down 720. Okay? That remember the equity closed at 620. That was $10 in the money. Now they're going to take all the premium out of there, and I'm going to put a bid down there at $1.60 on a limit order. How do you like me now? And that's taking advantage of this gap opening high. And it's since we've been covering Google, the highs are happening in a pre-market, not the regular buy and sell market. That's going to start in 31 minutes from now. So we need to segregate the gap price with Google versus its actual daily buy and sell. And are people finally going to find the value that we have covered Google for a long time? We said that there was value and that it was an underperforming asset and people needed to bid it up. And we have all the live videos and coverage of that prior to this pre-market 12/5/2011, December 5th. Merry Christmas to everyone. I love it. It's the best time of year. And the thing about it is that is a gap sequence that we're going to look at as far as where will that get exhausted in price? Where will that get top ended at and have to come down? That would be the side of the trade that you'll look at, and you'll take the closing bell here, 620.36, to the bid of 627.02. Okay? Close to bid. Let it be known. Now, remember, I must be forthright when I was showing you that chart that you got to remember when they marked assets down in this last markdown, this is that markup, and we're finally going to get up here and we're going to see if we can take out these highs here. Okay, my friends? And what that would mean is that you get marked down, and this was a buy side. This short side of the tape is definitely getting squeezed on this side of this breakout here. Look at the daily bars, and they're all what? European related, and they were a major headline event. It's going to be about the consolidation up here. That's going to count. And the thing about it is the systemic risk in the banking system is, my view is that I will still, at the higher levels of all of it, is even going up here to this trend line now, because we took where the 1075 low was up toward those highs, then they marked it back down, and now they're marking that. So basically it's a year-end rally trend. But however, at some point will fail because it will get short-term exhausted in price action, and they'll have to come down, because what is happening is that you have to learn how to buy the rumor and sell the news. I will conclude the way that markets will work as far as your bid and ask and your pre-market gaps. The price has to be segregated. So it's going to be a dollar ratio support level gap, dollar ratio support level gap, and all of these names. You will peak in price and you will pull back a few dollars, and you can, take advantage of that opening bell. How do I get positioned for the opening bell in price action? And we'll be happy to do that with you. We do it every day live, but with the MMTs here. However, this is that gap open up list, and that's that ratio. You don't have much down. This has got to be a news related event. You have one. There's your bear gapping down. All right. So these are just expected. They're nothing. However, the gap open up ratio is the king, and we open up, and the higher that they go in price, 27 minutes will be the opening bell, and these prices can erratically drop or go higher, and look for the top end of the gap to reverse below the previous half bar with accelerated volume selling. And if you're, then that means that people are bailing out of the stock, and that supports your short, MMT. So I'm going to tell people to set alarms up here on this S&P now, and let us not forget that the pre-market Nasdaq, pre-market gap open, and they're marking up the asset. They marked the assets down. They had marked them all down. Now they're marking them up. And it's the second Monday back to back that we've had a gap open up. That's positive within the bull cycle of the 1075 handle, which was this handle right here. Bam! Right up to these tops right here. Now, can this rally take that out and bring us up to that 1299 level in the S&P at a major resistance level right there? Okay? Now, this side here has got to clear through and come up and smack that, because this is going to be the major area, as you can see where I'm going across that chart now. And this is a pre-market update. It gives you a way of understanding that these pre-market gaps, you can get into those, and then on the opening bell, they drop the bid $2. You buy the cover, get out with the profit. That's one way of doing it. Okay? Because dollar price pre-market gap usually drops on the opening bell. When you learn to discover the pre-market high price and where it would drop on the opening bell, that would be your profit. All right. And that goes with all pre-market gaps. Okay? And, you know, we were just given some history here of that S&P, and we'll be happy to give you the same history right now. We'd be happy to give you the same history on the Dow. It's going to come right up here to these tops in pre-market. This is all pre-market, but you want to see where that is. We talked about it. Look, you're going to come right in here. And you're going to be gapping up into this crown right here, MMTs, and then potentially right up in here. And once again, they're going to have to take out these tops. Opening bell, 24 minutes. Opening bell, 24 minutes.